26 years of CNBC TV18.
Hello, good afternoon. You're tuned into Your Stocks, coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, in terms of the markets today, what we're keeping an eye out on, Nifty is below the 25,800 levels. 25,759 is what the Nifty is trading at, down almost 0.2%. 45-point down tick right now is what we're seeing for the Nifty 50. We did see some bit of a green in the starting of the day, but then since then we've seen a fall coming in. It tried to make a comeback, and again, a fall we're seeing in the last half an hour of trade as well. Now, apart from that, Nifty Bank, Nifty IT, that's too not doing well in today's trading session. Nifty IT is down now 0.6%, so some furthermore bit of a decline that we're seeing coming in for the Nifty IT. Nifty Bank too is also seeing that decline, what you saw in terms of charts over there. Both of them are trading near the day's lowest point. Let's pull up the advanced decline ratio. Where is that in the trading session today? Seems like a bit more even, Stephen. Not much of a difference there, but still at one point of time we were seeing more declines versus advances. So those two lines is something that we'll be keeping an eye out on in terms of how is that going to be moving as well. So let's watch out for that in the trading session as well. Apart from that, we're seeing PSU banks clearly. Like I said, banks is pressure. PSU banks specifically are also seeing some pressure over there. But let's get started with the show, which is a show where we solve all your stock-related queries. And to do just that, we have Somil Mehta, Head of Alternate Research as well as Capital Market Strategy at Mirae Asset Sharekhan, as well as Astha Jain, Research Analyst at Securities. Astha as well as Somil, good afternoon. Thank you so much for joining us on the show. First up with the first query for today, we have PC Achaya, who's writing to us from Bangalore. An investment query that's coming from him. He wants to know if he can invest in CG Power. What's the outlook for the stock, and are the current levels the right levels to look at it? Astha, your view for CG Power?
Hi, good afternoon to everyone. If I talk about CG Power, basically we all know that it is engaged in the distribution and the development of the electrical equipments like transformers and reactors, etc. Now, if I talk about the other fundamentals of this company also, what we have seen is that there is a robust, order book inflow, which we have seen. There is a margin expansion as well as we have seen the growth in their financial performance. So looking after all these factors, I find that yes, CG Power is looking good, but I think some more dips, if available, if it is available at some more dips, then those are the levels where I would like to recommend a buy. So from my side, it's a buy, but buy on dip strategy can be applied to that counter. This is what I believe. On here, the price target which can be set is around 730 to 750, but I recommend buy on dips at around 650 odd levels.
Okay, keeping an eye out on those levels over there. Buy on dip strategy is what Astha has highlighted. Somil, good afternoon. What's your view for CG Power? Last 6 months, not done anything specifically. Last 1 year also, the stock has been down 16%. Is it the right time to look at it for the long term? What are the levels that you would suggest?
Good afternoon to everyone. Not at this point of time, trading below 200 daily moving average has broken some very crucial levels. The previous quarterly lows have been broken on the downside. So that becomes a very negative sign for the stock. Now, what I'm expecting here is that to stock to continue the downtrend till 580, 570, and there we should be, revisiting the stock for a reversal point. However, at this point of time, my suggestion would be to avoid. The trend is down, and I'll be expecting this stock to go down till at least 580, 570.
Okay, 580, 570, then maybe that's the time that one could look at it coming in there for CG Power. But let's move on then to the next query for today. We have Ashok, who's writing to us from Hyderabad. He's holding 2,999 shares of Jio Finance. The price is 341 rupees per share. They're making a loss on this one. Now, he's asking whether he can continue to hold this or look to sell it, and his time period of holding is only 6 months. Astha, your view, 6 months time period for Jio Finance, should they hold, sell?
Definitely a hold from my side. Now, talking about the fundamentals of this counter, I believe that this company is well placed, to cater the opportunities which are present in the India's digital financial expansions movement, which is going on right now. In fact, if I talk about their execution also, whether their execution, if I talk about their lending part, their payment part, their investment part, so definitely the strong execution is what we are seeing in this counter. And I believe that going ahead, this counter will definitely show a strong momentum. Although in the short term, it may move downside from here. But if the time horizon is 6 months, as you have said, then definitely I would believe that one should remain invested in this counter for the price target of 320 to 330, which I suppose is the cost price of the investor as well.
Okay, so maybe in the 6 month time period, they can come back to that cost price. And Somil, what's your view coming in for Jio Financial Services? Are there any levels they should keep an eye out on? They bought it at 341.
I think at this point of time, the trend is down. Low top, low bottom formation below 200 daily moving average. It's not having a very, a trend on the upside. It has been trending down. Weekly low top, low bottom formation. I think in the very short term, I'll be a little bearish, and the targets would be around 270, 265 levels. But in the medium term outlook, I think it should outperform because the rally which we saw in the last 1 year from 200 to 330, 340 levels, that's an impulse move. And I think we are just retracing that impulse move. Once the retracement is over around 260, 270, I think that will be the right time to buy again. So I'm bullish in medium term outlook, but bearish in short term. Medium term outlook targets would be, I think, 360 above, and I'll be expecting all-time highs as well on the stock.
Okay, so medium term is the outlook that's coming from the fundamentals and the technical front. That would be a better hold period than just a short term, that is a 6 month time period. Let's move on then to the next query for today. We have SK Datta, who's writing to us from Kolkata. This is an investment query again. Now, he's asking if he can invest in Garden Reach Shipbuilders at the current levels. Astha, your view, Garden Reach.
Yes, so I think, yes, one can invest in this counter, but not at the current level. Maybe at the lower level of somewhere at around 2200 to 2150. Now, talking about the fundamentals of this counter, we all know that it is a shipbuilding company which comes under the Ministry of Defense. And now, talking about their major part is that most of their orders, they are, undergoing the execution. And that is from, I suppose, from FY25 to 27 is the major period when most of the orders will get executed. So definitely that makes a case for the company to register strong revenue during this period. In fact, what we have seen is the strong order pipeline. And in fact, the last 4 years were very strong for the company due to their order execution. And what we have seen that the CAGR growth of 40% this company has registered in the last 4 years. So looking after the robust pipeline, order pipeline, still we believe that this company can expand with the CAGR growth of more than 10% in all the three line of items, which is top line, bottom line, and operating profit. So yes, this can be an investment case, but not at the current level, maybe at the lower level. However, price target which we would like to attribute to this counter is more than 2500, but make investment at the lower levels.
Okay, make investments at the lower levels. Somil, what's your view on this one as well? Given that YTD Garden Reach has already seen that run up, right? All these stocks had seen a run up, and Garden Reach itself is up almost 45-46%. Now, what is the level that one should look to enter the stock at?
I think trend is down, definitely. Monthly, weekly, daily, all lower top, lower bottom formation. Today, it is breaching the 200 daily moving average as well. Some negative on the stock in the short term, in the medium term, both. And the 10 weekly moving average is at around 2000 levels. So my first target on the stock would be 2000. That would be a revisit level. Once we see a small basing out pattern breakout on the upside, that will be the right time to buy the stock. But at this point of time, avoid the stock. It can go down till 2000, maybe below that as well, because the trend is down.
Okay. Avoid the stock as of now. That's the view coming in there. But on that note, we're actually going to slip into a very short break, viewers. Don't go anywhere, because after the break, we'll be still continuing with all the stock-related queries that you all have sent us. So stay tuned in.
26 years of CNBC. 26 years of CNBC TV18.
Welcome back to your stocks on CNBC TV18. As of now, the Nifty has moved down a bit further, down 82 points in the trading session, right? When we started it, it was down almost 50 points. So 30 more points fall that we're seeing in the last 15 minutes of the trade. 25,750 approximately there is what the Nifty is trading at. But let's keep it going with all the stock-related queries that you all have sent us. And obviously, we have Somil Mehta as well as Astha Jain, who are still with us to answer all of that. The next query for today is come from Subhajit Banerjee, who's writing to us from Kolkata. He's holding 100 shares of LIC. This is at a price of 890 rupees per share, and 96 shares of M&M at a price of 2,960 rupees per share. On LIC, he's making a loss on this one as well right now. Now, he's asking if he should continue to hold this for a long term of 2 years, or he should look to sell them. What should he be doing with both of them right now? Astha, what is your view?
So talking about LIC, my view is positive. Remain invested in this counter for the price target of more than 1,050, because we are giving the price target of 1,100 to this counter, but it is purely a long-term target, not a short-term one. Now talking about the fundamentals of this company, fundamental seems to be okay, because what we are saying is that company's VNB growth is continuously increasing, and there are certain initiatives which company has taken, like they have started increasing their non-par mix, their non-agency revenue, and they have taken certain digital initiatives also. Along with this GST rate cut is definitely helping them in increasing the volume. So I think all the things are positive for this company, but due to the market sentiment right now, we are not seeing that much positivity in the stock prices. But it's a good long-term story to hold on. So idea here is to remain invested with a price target of 1,100. Now talking about M&M. M&M is also looking good to us, but here the investor is making huge profit. So idea here is to book partial or profits in 25% of the quantity and remain invested in the rest 75% of quantity. Talking about M&M fundamental seems to be very strong for this counter, because what we are listening from the management is now they have ideas to venture into the new segment where the ROE should be 18% or more, because these are their principle that they always want to go for such businesses where they can deliver the ROE of 18%. So seems to be very strong. Apart from that, whatever segments they are running on, their targets are increasing their growth from FY20 to FY30, like SUVs, LCVs, farm, etc. So M&M is looking well placed at these levels also to move more from here. But profits are high, so just book profit in 25% of the quantity and remain invested for the price target of 38.50.
Okay, that's the view there for M&M as well as LIC on the fundamentals. For M&M, can book some partial profit there also, is what Astha suggested. Somil, what's your view for LIC and M&M? And is there a chance that they could look to maybe average LIC on those notes, or just continue to hold both these for 2 years?
I think if the horizon is long term, then definitely hold on to these two stocks. Very good stocks. LIC, I think in the very short term, you may see a pain till around 800, 820. The downside targets would be 820, 800, but that would be a buying opportunity for long term. I'll be expecting targets of above 1,000, 1,100 in the long term. And for M&M definitely you can book some profits, but if you're holding for long term, I think every dip should be a buying opportunity here. If it comes down till 3,300 levels, that will be a great buying opportunity. I don't see that stock coming down that sharp, but 3,300, 3,400 will be a good buying opportunity, and hold on for long term.
Hold on for the long term. That's the word for M&M as well as LIC on the technicals as well. Let's move on to the next query for today. We have Arunachalam, who's writing to us from Chennai, holding 29 shares of Trent. Price is 7,302 rupees per share. Now today Trent is trading at 4,000. He wants to know whether he should continue to hold or sell at the current levels. Astha, your view for Trent once the stock that has seen such a sharp run up. Now, what should the viewer be doing with this? Because they bought it, I think, at all around those high levels. Currently, 4,000, so a bit of a worry there for them.
Yes, and here since the losses are huge, so I would not recommend exit at least at these levels. So idea here is to just wait for some more quarters. Now there are reasons why we are seeing such a sharp fall in the prices. First of all, what we have seen is the decline in the revenue per square foot. Secondly, what we are seeing is that now the company is expanding into the tier two cities as well as new stores. So now these expansions they have a higher gestation period, and hence we are not seeing that kind of strength in their profitability, in their financial performance as of now. But I think if we look forward, like for coming 2 to 3 quarters, I think definitely this will start moving upside from here. So there the investor will get the chances to exit at the higher level. So right now just stay invested in this counter and hold your holdings patiently, because right now there is no logic of exiting at such huge losses.
Okay, no point exiting with such losses. Might as well hold on to Trent. Somil, your view for Trent?
Trent started the rally in the year 2023, January, and the rates were around 1100, 1150 levels. The highs were around 8,200. So great rally in the last 2.5 years. Now the entire rally has been retraced by almost around 61%. I'll be expecting the stock to go down till 3,800, 3,900, but that will be a buying opportunity because the 61% retracement is almost done here. Once we see a basing out pattern in this stock, that will be a buying opportunity. The retracement is almost done. We'll be waiting for a positive move, a positive quarterly close, and that will be a buying opportunity.
Okay, that's the view there coming in for Trent. But Somil as well as Astha, thank you so much for joining us on the show and helping our viewers answer all those stock-related queries and understand what they should be doing with them as well. Thanks so much for joining in. A quick check in terms of the market, because we're seeing a further more decline. Nifty now trading at the day's lowest point, below 25,750 levels. So we'll watch out for that, down almost 90 odd points in the trading session. Obviously, in terms of the fall that we've seen coming in the last half an hour, for the Nifty 50, we're seeing Adani Enterprises, JSW Steel, M&M, some of the names that have seen a fall in the last 30 minutes as well. So let's watch out for that. And other than that, banks, IT, mid and small cap too, seeing some bit of a pressure right now. But with that, we're absolutely out of time on this edition of Your Stocks. Thank you so much for tuning in. Up next, we have Closing Bell to take you through the last hour of trade.
"26 years of CNBC